Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? It's Friday. Good morning. Happy Friday, everybody. Hope you're having a great day. Today is the daily market commentary, Friday edition. Hope you guys all had an absolutely amazing trading day yesterday, as we had a little bit of a market pull down through some of our 15-minute levels, but our 60-minute levels, boy, did those hold nicely. So let's go ahead and take a look at some of those areas. For those of you new to the channel, do me a favor. Click the subscribe button, hit the notification bell. If you're not new to the channel, do me a favor. We're trying to grow the channel, and I feel weird just pandering for likes and thumbs up because I really don't have validation that I need people to like me. But hit the little like button. Hit the thumbs up thing. It doesn't take you more than half a second. You don't even have to think about it. But it helps the YouTube algorithm know that people are actually watching and paying attention. So hit the like button. In the comment section below, just say hello. Let me know where you're from, just so that the computer knows that people are paying attention. All right, let's go ahead and dive right in. So looking at the S&P, we are up about 4.5 points this morning. And the 4.5 points that we're up this morning are really off of the rally from our 60-minute area of demand. Now, yesterday when looking at this, I kind of felt like we would rally from the 60-minute area of demand up into this level of supply. Now, this supply level didn't hold, knowing that supply levels are always going to be weaker in an upward trend. We did get a really nice move off of here, but think about it for a moment. If let's say you took the supply and got stopped out, well, that's a 2.5 point level. But the demand area was from 29.76 to 29.95. So that's a 19-point level. I'll gladly take a 19-point level for a win over a 2-point level for a loss. Now, since both of those levels have been traded through, I need to remove both of those areas, right? Both of those areas need to be taken off of my trades, and I need to be looking for what's my next area of opportunity. Well, we have rolled over a little bit this morning. A little bit of a rollover this morning from our 2 a.m. reversal in the markets, and we've traded back up into this area, which was wound up being a really nice little level of supply. So I don't feel like that level's going to hold again because of this upper wick right through here. That upper wick right through there makes it a little bit less probable of an area. So now what I'd still be looking for is this area up here is probably, if you are thinking about a supply, I think this is about the best one, although remember, it's at the all-time high, right? So always a bit more risk inside of there. When I go to the 15-minute chart, I've got a little bit of supply up above me here. I might actually want to look down here at our demand areas to see where my best area of demand lies. And when I do that, I'd say that the best area is probably right about in here. Now remember, it's a 15-minute level, so 15-minute levels, once again, always have slightly lower degrees of probability. So that would be our 15-minute demand, 15-minute demand as well as 60-minute area of supply in the S&P. I don't think it makes sense to try to trade in between there. Maybe you can get a breakdown into this region for a few points, for 5 or 10 points, but I don't know that it would be worth it. It really depends on what our basing is in front of this area here. Next, the Nasdaq. So when I look at the NQ, now the NQ we had set up off the reversal. We did do a nice touch and go off of this level as well, and we took our stop and moved it up. Now, for those of you that are Traders Army subscribers, you got our trade feed update where we talked about the ES and NQ rallying off those 60-minute levels, and then later in the day, towards the end of the day, we talked about where those levels are as far as your profit potentials. And so that NQ level definitely did hit its target area, which was the level right up in here, moving off that level. And then we switched this to a confirmation. So this level is still valid, but it's now been switched to a confirmation entry. As of our last daily market commentary, this was still a limit entry. So a very nice strong move has come off of this one. I don't think that this has as clean of a level up here to short as the S&P's does around its all-time high. So I don't know that it would make sense to short the all-time high. It usually doesn't make any sense to short the all-time high anyway, but if you're a bit more aggressive, I at least want to have it out there as an option. On the 15-minute time period, very similar to the S&P level, the Nasdaq also has a 15-minute area of potential quality demand down here where we could see a reversal. Now, with both of these markets, if you decide to hold it over the weekend, understand the exposure that you take and know that we can hedge that exposure. We hedge that exposure utilizing options on these futures products. So utilizing options on the futures products is a way to hedge some of this exposure. Next, crude oil. So crude oil also rallied up off of our 60-minute level. A really nice move up in crude off of this level. Leave a comment down below. Let me know if you played this crude level, if you were able to take advantage of this. Now, this level, we hit it once, moved away, and it was the 6-candle rule came into effect, right? 1, 2, 3, 4, 5, 6. So in our update, actually, we had talked about the CL has not moved much, but is currently sitting at a small profit. If you observe the 6-candle rule, move the stop to break even, right? So we move the stop to break even, and sometimes in the 6-candle rule, and the reason that I show you that is because sometimes in the 6-candle rule, you move your stop to break even, but price does still continue to run. So now price has run over a point from that level, and a point off of that level. Remember that crude oil trades at $1,000 per point per contract, right? So you've moved about 3 to 1 or 4 to 1 off of that area, and so now you've got an opportunity, if you're so inclined, to take your stop and move it up. You can take your stop and move it up to probably underneath this little area of basing here, this 55.84, to lock in a lot more profit as we are heading into the weekend. Because when I look at the big picture, when I go to my 4-hour trend, my 4-hour trend is still down, right? My 4-hour trend is still down, and we're at a really nice rollover point. So I would be looking to say, okay, maybe it's time to take up the remaining number of my contracts and move the stop up on those, since my big picture is still trending down. The next time we trade into here, I don't think I'm going to be interested in it because of the fact that it's still in a bigger picture downward trend. Matter of fact, I think it's not a bad idea if you're so inclined to take your profit off of that long, and you might actually start looking for short opportunities up here, and possibly even a short breakdown below where I said that stop loss would be on your long if you're inside of that position. So you may get a short breakdown off of this level, because then that allows you to rejoin the impulsive move, which is to trade down. And once again, as with everything, if you're going to hold it over the weekend, make sure that you have a hedge. In gold, we finally broke out of our 4-hour triangle pattern, got a really nice run off of that level with our stop right down in here. Towards the end of the day, we said it's time to take your stop and move it up, and so you've gotten a really nice run out of that little breakout, and gold's continue to kind of rally up from that zone. I think that our next step, if you didn't catch the breakout, you may get a reversal opportunity. And the reversal opportunity looks like it may come into play right about here. So if you caught the gold, let me know. Yesterday was one of those days where it was a really nice trading day for pretty much all of our markets. And that's what happens, right? You have days where you don't have great trading days, and then you have days where things just seem to work out pretty well. And so if you did catch some of these, I would not be opposed to you saying, you know what, I had a really good day yesterday, I'm going to take the day off. Because I spoke to a trader yesterday who had a phenomenal day, and I said, well, what are you doing tomorrow? And he said, I'm taking the day off. And it was one of the greatest things you could have said, because you don't have to trade every single day. All right. So looking at bonds and currency markets in our 10-year note. So yesterday in our 10-year note, we had removed a level because we just didn't feel like it was a high-quality opportunity. We'd removed a level from up here, and no surprise, price popped right through there and then kind of came back down. So I still like bonds the way that we had them. Really no change to the area that I'm looking at in the bonds arena. When I look here at the Aussie, we had a really close move into our area. Unfortunately, we were unable to get that one filled. And then a really close move the day before, which I talked about on an earlier DMC. So now this also needs to switch to a confirmation entry. Both confirmation entries set up in this level. So let's take a look at the euro. So our euro level yesterday, our 15-minute zone, we came just before the level, which I said, you know, when you come just before a level and we based in front of it. So if you know the answer to this, if you didn't get the trade feed update yesterday, but you know the answer to this, why didn't we take this 15-minute level? There's a reason we didn't take it. It was posted in the trade feed update as to why we wouldn't take that level. Leave me a comment down below. I'll be interested to see if that old level of supply acts as a new level of demand. We get an area of support here. If we do, let's see if we get a little bit of a pop higher. And if we get that pop higher, it may take us into an area up here of prior reversal. That being said, I'm not a huge fan of really trading all that much inside of this level because my 4-hour is really chopping around, right? I have a lot of chop inside that 4-hour. We still have this breakdown line that's still very much in play, but we just haven't gotten back to that area. Canadian dollar. So the Canadian dollar, we got a little rally off of this level down here. You may or may not have taken this area. We got a really nice rally off of this level, and then we came back to our breakout line and then fell away again. So remember, this breakout line only becomes valid if we have basing directly in front of the level, it's still very much in play on the breakout up here. And this was a touch and go off of this level, so this is still a viable trade as a confirmation entry. So nothing really has changed in the Canadian dollar, although I heard from a couple of people that they took that long off of that area. Great British Pound and Japanese Yen. The Japanese Yen, we rallied up from this little wedge breakout to our target. So this one moved up to our target as it was this little area of supply right in here, and now has pulled back from that zone. We didn't have a clear tweezer top up here, as there was one candlestick in between, but this is a very tweezer top like setup that we had in here. When I look at this 15-minute chart of potential reversal points, you know, there's a lot of potential reversal areas now inside of here that all look okay. Right? The key there to remember is that they all look okay, and nothing is blowing me away as a truly outstanding and amazing level. But this is probably the one from a pure price action standpoint I like the best. What I don't like is the time of day that it was formed and created. So that is definitely a slight hindrance on the quality of that zone. All right. So there is our markets for today. Remember what we have to say about the weekend. If you're holding something over the weekend and it's a futures position, understand the risks and exposures that you take, and so hedge that, right? Be able to hedge that utilizing the futures markets, the options on futures markets, so that you are not exposed in an uncontrolled risk environment. So that's something that's also that's very important. Another thing to remember is there's going to be weeks where the futures markets may not make as much sense, and it may not be the right thing to do to always look at futures. If all you trade is futures, then that's like going into a fight where you are allowed to have a full cachet of weaponry and all you take is one. When in reality, there are more opportunities out there to help you achieve your goals and what you want to do than just trading futures or than just trading currencies. I genuinely believe, I didn't get into this business to be a futures trader or to be an options trader or to be a currency trader. You get into this business in order to transform your life. And sometimes that means you're going to trade futures, and sometimes that means you're going to trade options. Don't overlook the opportunities that are presented in the equities markets because you say, well, I'm a futures trader. I know a lot of people who say, well, I don't want to move on to options until I get it in futures or until I get it in another. That's flawed thinking. You're not going to get it. It actually helps your probability when you have more opportunities to look at. So just kind of keep that in mind. Don't close your mind to it. If you want to know more about options and it's something you've been hesitant to learn, go to tradersarmy.com. We have a tremendous amount of options content that you can take at your own pace and on your own and at your own time that hopefully will help you to kind of get that next step up. So hope you guys have an amazing weekend. I will be back live trading room Sunday night for those of you that are Traders Army members, and then everybody else, I'll be back with a daily market commentary on Monday morning. Have a great weekend. See you all soon.